The paradox. In a dimly lit room, somewhere between legality and invisibility, a transaction occurs. No bank approves it. No government tracks it. No signature is required. Yet value moves. Instantly. Globally. Irreversibly. This is the paradox of our age. The most advanced financial technology ever created is also the most invisible. And beneath the surface of innovation, a shadow economy is quietly taking shape. Powered by crypto, shaped by human desperation, and driven by forces most of the world refuses to see. This story does not begin with crime. It begins with trust. Broken trust. When trust controlled money. For centuries, money relied on authority. Kings stamped coins. Empires enforced trade routes. Central banks promised stability. In exchange for obedience, trust was not optional. It was enforced. But every system built on trust eventually tests belief. And the 20th century was filled with those tests. Hyperinflation. In Weimar Germany, currency collapses. Across Latin America, capital controls. Throughout Asia, frozen bank accounts. During times of war, each crisis left scars. And each scar taught the same lesson. When institutions fail, people look for alternatives. By the early 21st century, those alternatives were no longer theoretical. The birth of crypto. In 2008, global banks collapsed under their own complexity. Amid the chaos, a quiet white paper appeared online. It proposed something radical: a currency without rulers, transactions without intermediaries, trust without institutions. Bitcoin was not born as a criminal tool. It was born as a response to systemic failure. At first, crypto lived in obscurity. Then came speculation, then adoption, and then something else entirely: the shadow migration. As governments struggled to regulate this new frontier, parallel systems began to form. Darknet marketplaces, once dependent on cash and couriers, found a cleaner engine. Cryptocurrencies offered anonymity, borderlessness, speed. What once required complex laundering networks could now be executed with code. Drugs, weapons, stolen data, ransomware payments. Black markets did not appear. Because of crypto, they migrated. Because crypto removed friction. The deeper truth, focusing only on criminals, misses the truth. The crypto underworld is not driven by villains alone. It is fueled by sanctioned, surveillance, inflation, financial exclusion. When nations are cut off from banking systems, crypto becomes a lifeline. When activists fear frozen accounts, crypto becomes protection. When migrant workers face predatory remittance fees, crypto becomes survival. Shadow markets are not always malicious. They're often adaptive. Cause becomes consequence. Protocols don't surrender. As crypto matured, new mechanisms emerged. Stable coins reduced volatility. Without banks, privacy coins promised untraceable transactions, decentralized exchanges, removed oversight. Each innovation solved a real problem. Each also deepened invisibility. Regulators were no longer chasing companies. They were chasing protocols. And protocols do not surrender. A parallel economy. By the 2020s, unseen forces became impossible to ignore. Billions flowed daily through decentralized networks. Some clean, some dark, much unclassifiable. Ransomware demanded crypto payments. Sanctioned states explored digital assets. Organized crime adapted to blockchain analytics. The shadow economy was no longer underground. It was parallel. Crypto did not create shadow markets. It exposed the ones that already existed. The power shift. Traditional finance always had shadows. Offshore accounts, shell companies, tax havens. Crypto flattened the hierarchy. It gave individuals tools once reserved for elites. Power did not move upward. It moved outward. And with that shift came chaos. Governments responded with regulation, surveillance, enforcement. Innovation responded by moving away from control. A digital arms race had begun. What comes next? Today, the underworld no longer hides in basements. It lives in systems, in servers, spread across continents, in smart contracts, executing without permission, in autonomous code that runs without oversight. As artificial intelligence merges with crypto, markets will begin to operate beyond human supervision. As central banks launch digital currencies, decentralized systems will challenge states directly. Control versus autonomy. And as inequality deepens, shadow economies will not disappear. They will professionalize. The future of finance may not be decided in parliaments, but in code repositories and anonymous forums. The mirror. This is not a warning of doom. It is a mirror. Every shadow market reflects a failure. In the light, where systems exclude, alternatives emerge. Where trust erodes, parallel structures form. Crypto is not the enemy of order. It is the consequence of its absence. The question is not whether the crypto underworld will grow. It already has. The question is whether the world will fix the forces that feed it or keep pretending. Shadows can be erased without fixing the light. History is clear. When unseen forces are ignored too long, they do not stay unseen. They reshape the world.